The US government has to finance itself. It can only find that financing on the front end. No one's buying these 10 years anymore. No one wants that level of counterparty risk with the United States. I'll lend you money in 1 month duration or 3 month duration before you got to pay me back. That's it. And so those come flooding into the system. There's a lot of cash needed to finance that. There's not enough reserves in the system to finance the US government. That means rates have to come down. Quantitative easing in some capacity has to start. This is science. This is math. This is the fiat world. The blue line tricking you. It's like underwater. Underground is the truth. And above water, this blue line, Trump says, oh, stock market's at all-time highs. You flip the chart, that's what becoming a Bitcoiner is. Exit the blue line, get on the orange train.
Mallers begins by describing Bitcoin as a mirror that exposes the real state of the world. While governments manipulate interest rates, inject liquidity, and manufacture asset performance, Bitcoin remains untouched by central authority. It cannot be censored, inflated, politicized, or engineered. The U.S. government needs so much money to finance its debt that the Federal Reserve is no longer in control. The government must issue unprecedented amounts of short-term debt just to stay afloat. Investors no longer trust 10-year or 30-year U.S. debt. The creditworthiness of the U.S. is in question, and the market is voting with its feet. No one wants long-term exposure to a deeply indebted nation with a weakening currency.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Fiscal dominance continues to strengthen. It's becoming a serious problem. And as I've told you guys before, Bitcoin is a truth machine. It's telling you the realities of the world around you. Things like the US government, things like the stock market, things like the Federal Reserve. These things are distorting reality. They're manufacturing volatility to be down. They're engineering risk out of your life. They're not telling you the truth. They're not telling you what's real. Bitcoin is. It's in fact, I'd make the argument Bitcoin is the only free market we have left in the world. And so as the plot thickens, and the plot to me is in the plumbing, it's in the financial system, it's in the pipes, and the pipes are breaking. Seeing Bitcoin bounce around, seeing it react, seeing it move 5% up over the weekend as the US government seems to be coming back, and as Trump is introducing stimmies, brrr, you hear that? Shh, shh, shh. You hear that? That's the money printer. Of all of this, in a potentially overcomplicated way, the financial system needs a lot more dollars than it already has to survive, period. Because you're thinking, oh, the government's going to come back on, the Treasury General's account can be spent down. No, John's point here is that it has to be structurally higher because of the deficits. This is fiscal dominance. Fiscal dominance is like, someone clip this. If people want an example of fiscal dominance, it doesn't matter what the Fed wants or thinks. The US government has to finance itself. It can only find that financing on the front end. No one's buying these 10 years anymore. No one wants that level of counterparty risk with the United States. I'll lend you money in 1 month duration or 3 month duration before you got to pay me back. That's it. And so those come flooding into the system. There's a lot of cash needed to finance that. There's not enough reserves in the system to finance the US government. That means rates have to come down. Quantitative easing in some capacity has to start. This is science. This is math. Consumer sentiment in America and the stock market were 1-to-1. They equaled each other. Stock market went down, consumer sentiment was bad. Stock market had all-time highs, consumer sentiment was good. Now, what you can see very clearly is this broke in 2020 in COVID, where the stock market went up, and consumer sentiment has gone down since. Consumer sentiment is lower today than it was during the 2008 financial crisis and the years that followed. I'm going to say that again. The stock market is at an all-time high. Consumer sentiment is at an all-time low in the last 25 years. The people are in pain. but assets are at all-time highs. Now, if I then overlay the stock market measured in gold and the stock market measured in Bitcoin on this chart, it tells a much more honest story. So what are we looking at? In white, consumer sentiment. In blue, the S&P 500. In yellow, you're looking at the stock market, the S&P 500 measured in gold. The S&P 500 measured in gold matches about consumer sentiment. It makes a lot more sense. So we're measuring the S&P 500 in the wrong ruler. We're using the wrong measuring system. Dollars are pointless. They're worthless. They're distorting reality. If you measure the stock market in gold, you'd realize the world has been going to shit for decades. And that no one's job out of college is outpacing inflation. There's a K-shaped economy that's already been formed. Most of America has been living through a recession, a depression, a real depression. I've said on this show before, you all have been living through a depression. You're like, man, I wonder what it was like during the Great Depression. You're living through one. Just measure it in the right asset, because during the real Great Depression, 100 years ago, the dollar was backed by gold. Now the dollar is backed by someone clicking a keystroke on a computer. So if you measure it in gold like it was during the Great Depression years prior, you're living through one right now. And on this chart, this is my favorite part, I put the S&P 500 against Bitcoin. Look at that. As soon as Bitcoin launched, the S&P 500 measured against Bitcoin went to zero as fast as it could. And so the way I read this chart is the blue line is a distorted version of reality. It's not real, because consumer sentiment, gold, and Bitcoin tell the opposite story. It's tricking you. And consumer sentiment is trying to catch up to gold. And consumer sentiment and gold is trying to catch up to Bitcoin. Bitcoin tells you the future. Bitcoin tells you the truth. You can't cheat Bitcoin. You can't confiscate it in central banks and governments. You can't go on and off, the gold reserve. We divorced from the gold reserve. We're back on it. Can't do that. Bitcoin doesn't need anybody. It is a self-contained, self-operated financial system. You can't cheat it. So you want to see a piercing truth? Do you want to look outside the window and see the universe as it really is? This is it. Bitcoin is showing you how bad things actually are and where consumer sentiment is actually going. Consumer sentiment is going to find that orange line. So will gold. This is the chart I was showing you guys. This is consumer sentiment divorcing from the stock market during COVID. And then if you look at it in gold terms, it makes a little bit more sense. If you look at it in Bitcoin terms, you can see the future. Now, what I did with this chart is I just inversed it, okay? So instead of looking like the world is declining, this looks like the world is getting better. This is a Bitcoin standard visualized. The blue line is the fake fiat world, the bullshit stock market, the savings account. They've tricked everyone into thinking that they're saving for their future, only for them to realize when it's time to buy a home, they can't afford it. When it's time to fall in love, they can't afford it. When it's time to buy a house, to have kids, they can't afford it. When it's time to pay off student loans, they can't afford it. The orange line is a Bitcoiner exiting the system, having children, real estate getting more affordable, education getting more affordable, family getting more affordable. When you live on the orange line, life gets cheaper. When you live on the blue line, life gets more expensive. So the white line is consumer sentiment inversed. So that's Bitcoiner sentiment. Since Bitcoin has launched, the world has gotten better for Bitcoiners. It's a bigger place. It's happier. We're healthier. Since I became a Bitcoiner, I've gotten healthier. I've gotten more educated. I've fallen in love. I plan to have loads and loads of children. I've started businesses, and I've been able to accrue savings for my future. I've been able to stack sats. I've become a net producer to society. This is the fiat world, the blue line tricking you. It's like underwater, underground is the truth. And above water, this blue line, Trump says, oh, stock market's at all-time highs. You flip the chart, that's what becoming a Bitcoiner is. Exit the blue line, get on the orange train.
As short-term debt floods the market, U.S. funding markets begin to seize. Mallers notes, the standing repo facility was tapped for $50 billion so. The secured overnight financing rate began exceeding the interest paid on reserves NAR. This is a sign of emergency liquidity injections. It's not normal, it's not stable, it's the financial system quietly screaming for help. This is what fiscal dominance looks like. The government is so indebted that the only path forward is to print more money. And that's exactly what Bitcoin was built to protect people from.
You can start to see the system falling apart. You can start to see there's scarcity in reserves within the financial system. There's not enough cash. And the thing that people don't actually understand is that it's T-bills. It's the US government that is issuing these short duration debt instruments. That's the reason there's not enough cash. If the US government finances itself with 10-year treasuries, so they're borrowing money and they don't need to refinance or owe it back for 10 years, for 30 years. That's a lot easier on Scott Bessent and the US Treasury. They don't have to constantly be raising money, refinancing it, rolling it over. When they're raising T-bills, so all of the US government debt issuance since like halfway through Biden's term with Janet Yellen and now in the first year of Trump's term with Scott Bessent, they keep going to the front end of the curve. What that means is they're not doing 30 years or 10 years or even 2 years. They're doing like 1 to 3 months. Like what Tether buys? Tether is buying T-bills. So yes, they are buying US debt. They're buying very short duration. That puts a lot of pressure on the US government, particularly Scott Bessent, to be able to finance all of this. And so you're flooding the market with new T-bill issuance. When you have so much T-bill issuance flooding and hitting the market, it pulls all the cash out of the system, right? So think about it. All of our bank deposits, money market funds, endowments, these are the predominant lenders to the US government. They're buying these instruments. If Scott Bessent, instead of issuing like one load of 10 years and not having to worry about it for a while, he's constantly issuing these T-bills, these shorter instruments. And so, and sorry if I'm over-explaining to those that know this, but when you ramp up that way, you need a lot more cash liquidity to finance the US government. Now, if the US government could lend at 10 years, it would. But no one's buying that dog shit. Nobody's buying that dog shit. And so the way they kind of kick the can down the road is they say, okay, well, you lend to us for 1 to 3 months. We understand that no one wants counterparty risk with the US government. We're $37 trillion in debt. There's inflation on the horizon. There's all sorts of problems. No one wants a relationship with us for 10 years as a counterpart. Will you take 1 to 3 months? And someone like Tether says, yeah, I'll take 1 to 3 months. That's virtually risk-free. I mean, at the end of the day, you're at least going to give me new printed dollars. You can't default. And if I have to take future inflation risk for 1 to 3 months, for 30 to 90 days, that's reasonable, right? And so that's what's drawing all of the liquidity out of the financial system. And you see the results of this when you see that SOFR starts to exceed the interest on reserves at the Fed. And when you see the standing repo facility get tapped for $50 billion, this is $50 billion printed US currency to protect this market and prevent it from exploding and causing a financial crisis. So when I say when deficits set monetary policy, deficits is our government deficits, all the debt that we have created in the past and continue to create to march forward. It is setting monetary policy. It's demanding new money printing. It's drying up liquidity. And that is a very dangerous place for a government and a currency to be in. This is emerging market behavior. Okay, this is like Argentina. Okay, this is behavior where the government is so indebted, the only way out is to print a bunch of money. And that's what I mean by fiscal dominance.
Jack Mallers' message is a warning, but also an invitation. He isn't saying the world is ending. He's saying the system we depend on is breaking apart. And most people don't see it because the dollar hides the damage. Bitcoin removes the illusion. It shows you what's really happening to purchasing power, to savings, to livelihoods, to the global reserve currency, and to the financial plumbing beneath the economy. Fiscal dominance isn't coming, it's here, and Bitcoin doesn't just predict this future, it reflects it. So the question Mallers poses is simple.